Welcome back to the Malaysia Money Matters show. It's the 7th of January 2025, and we're diving into a sea of company news and updates.
Lots to cover.
Yeah, we're talking potential investment gems, economic ripples,
Mm-hmm.
even some global currents affecting the Malaysian economy.
There's certainly a lot to unpack today, from potential IPOs to ongoing takeover sagas. The Malaysian market is buzzing with activity.
Let's start with a story that's been making headlines.
Okay.
The battle for control of Malaysia Airports Holdings, or MAHB.
Right.
The Khazanah-EPF consortium, which already has a hefty 70.1% stake, has extended its takeover bid deadline to January 17th.
They're aiming for that crucial 90% ownership to finalize the privatization, but it's not a done deal. MAHB's independent directors are pushing back, arguing that the RM11 per share offer undervalues the company, especially with the travel industry rebounding.
That's a pretty significant difference of opinion. The consortium is dangling a 38 times earnings multiple
Right.
based on 2023 figures, which sounds tempting.
It does, but the independent directors might be seeing a brighter, more profitable future for MAHB as a publicly traded company. So the question for you is,
Yeah.
do you side with the consortium's take the money and run approach, or do you believe in the independent director's vision for a potentially more lucrative future?
A real dilemma for MAHB shareholders.
Yes.
Now let's move from airports to something a little more flavorful.
Hmm?
Oriental Kopi, the beloved cafe chain known for its egg tarts and polo buns, is about to launch its IPO on the ACE market.
Okay.
That's the Access Certainty Efficiency Market, a platform for emerging companies on Bursa Malaysia. The IPO is set for January 23rd with a share price of 44 cents.
This values the company at a considerable RM 880 million, a multiple of 20 times the projected 2024 earnings. They're planning to use the RM 184 million raise to fuel expansion both domestically and internationally, build a new HQ and central kitchen, and boost their marketing efforts.
Sounds ambitious,
Yeah,
but they're not immune to challenges. Rising raw material costs are a concern.
of course.
And they've hinted at potential menu price increases.
That's a tricky balancing act. They need to maintain their affordability to keep those loyal customers coming back for more egg tarts. How do you think this will play out for Oriental Kopi? Are they poised for success, or will these cost pressures put a damper on their growth?
It's a tough call. Let's shift gears to a company riding the wave of artificial intelligence, NationGate.
Okay.
This electronics manufacturer is making headlines as a key NVIDIA partner in Southeast Asia.
Right.
They're gearing up to deliver NVIDIA H200 and B200 AI GPU servers, essential hardware for AI applications in the first half of 2025.
Analysts are quite optimistic about NationGate's prospects. Macquarie has set a target price of RM4, a significant jump from the current RM2.76, that said their impressive 3Q FY 2024 profit was heavily influenced by unrealized Forex gains, basically paper profits from currency fluctuations.
So the question is this AI venture a sure bet, or are investors getting ahead of themselves? Are those unrealized gains sustainable or just a temporary boost, something to ponder?
Absolutely.
For sure.
Now let's look at an IPO success story. CBH Engineering, their public offering, was oversubscribed by an impressive 34.21 times. They offered 94.05 million shares at 28 cents each, attracting strong demand from both Bumiputera investors and the general public.
That's a clear sign of investor confidence. They're set to list on the ACE market on January 16th with a market capitalization of RM 536.65 million. This suggests strong growth potential.
It does. CBH Engineering provides a range of mechanical and electrical engineering services, and their track record across diverse projects, from substations to shopping malls and data centers, seems to have resonated with the market.
From soaring successes to potential pitfalls, let's talk about Toyo Ventures.
Okay.
They're locked in a dispute with Vietnam's Ministry of Industry and Trade over the termination of their Song Hao 2 thermal power plant project.
The Vietnamese government claims Toyo Ventures failed to secure the necessary financing despite the company's assertions to the contrary. This raises concerns about Toyo Ventures' credibility and their ability to deliver on international projects.
It's certainly a red flag for investors. This dispute could impact their future projects and financial standing, a reminder that international ventures, while potentially lucrative, also come with their own set of risks.
Speaking of risks, let's zoom out to the broader economic picture. The Bloomberg Asia Dollar Index has hit a 2-decade low. This means Asian currencies, including the Malaysian ringgit, are weakening against a strengthening U.S. dollar.
This can be a mixed bag. A weaker ringgit makes Malaysian exports more appealing, but it also pushes up the cost of imports, which could fuel inflation.
Indeed, and adding to the economic uncertainty is the incoming U.S. President Donald Trump and his unpredictable stance on tariffs. His flip-flopping between narrowing and maintaining his tariff plans has kept markets on edge.
This uncertainty can make it difficult for businesses to plan and invest, potentially impacting economic growth. What are your thoughts on this, especially with the ringgit already weakening?
It's definitely a situation to watch closely. We need to see how Trump's policies actually play out and how the Malaysian government responds to these global economic shifts. There's potential for both opportunities and challenges.
Okay, let's turn our attention to some other noteworthy company updates. ISO Group, formerly known as Mindtech Resources, is continuing its push into renewable energy. They've just secured a 99.99 MWW solar power plant project in Perak, their second successful project under the large-scale solar LSS program.
This solidifies their position in the renewable energy sector and in the automotive world. Proton, despite falling short of its initial sales target, has managed to hold on to its second-place position in the Malaysian car market for the sixth year in a row.
They've also seen growth in their export sales, with Egypt emerging as a key market. This diversification could be a key driver of future growth for Proton.
Absolutely. Expanding their global footprint reduces their reliance on the domestic market and opens up new revenue streams. It's a smart strategy, particularly as the global automotive industry continues to evolve. Now let's shift our focus to the political arena. Former Prime Minister Najib Razak has been granted an appeal to challenge his prison sentence.
His son has presented evidence alleging an addendum exists that would allow Najib to serve his sentence under house arrest. This has sparked controversy and calls for transparency from the government.
This is a significant development that could have far-reaching political ramifications. The outcome of this appeal will be closely watched as it could impact public sentiment in future elections.
And finally, let's talk about an issue that affects us all: housing affordability. A think tank, the Center for Market Education, is proposing a new way to measure it, the Financial and Social Affordability Index, or FSAI.
They argue that traditional metrics, which mainly focus on income versus property prices, don't capture the full picture. FSAI aims to incorporate social factors like access to transportation, property size, and job opportunities.
It's an interesting approach that could help policymakers better understand the complexities of the housing market and develop more effective solutions. What are your thoughts on this new index?
I think it's a step in the right direction. Housing affordability is a multifaceted issue, and we need a more holistic approach to address it. The FSAI could be a valuable tool in that effort.
We've covered a lot of ground today, from company news and investment opportunities to economic indicators and political developments. It's clear that the Malaysian market is dynamic and influenced by both local and global factors.
Staying informed is key for any investor navigating this landscape. There are potential pitfalls to watch out for, but also exciting opportunities on the horizon.
Definitely. Well, that brings us to the end of part one of our deep dive. We'll continue our discussion in part two, delving deeper into some of these stories and exploring their potential implications for your investments.
Stay tuned. We'll be right back after a short break. It's fascinating to see how these individual company stories we've discussed often reflect larger economic trends.
Yeah, it's like each company is a little boat navigating a vast ocean with those powerful currents pushing them in different directions.
Exactly. Take NationGate, for instance. Their current success is closely tied to the global surge in demand for AI technology. NVIDIA is a dominant player in that field, so NationGate's partnership with them gives them a significant advantage.
But that reliance on a single partner and a specific technology also exposes them to risk. What if demand for AI slows down or a competitor emerges with even better technology?
Those are the kinds of questions investors need to consider. It's crucial to look beyond the current hype and assess the long-term viability of both the technology and the company's position within that evolving landscape.
That makes a lot of sense. And speaking of navigating tricky waters, it brings to mind Oriental Kopi and the challenges they face with rising costs, a situation many businesses are grappling with right now.
It's a particularly delicate situation for a company like Oriental Kopi, which has built its reputation on affordability. They have a loyal customer base, but how much are those customers willing to pay for their favorite egg tarts and coffee before they start seeking cheaper alternatives?
That's the million-dollar question. Can they strike a balance between maintaining their attractive pricing and protecting their profit margins? It's a tightrope.
It is.
Walk for sure.
Absolutely. Now let's turn our attention to a company that seems to be on a more stable course. Wawasan Holdings, this construction company, has been quietly securing a consistent stream of projects, including a recent RM66 million residential development.
And their upcoming IPO on the ACE market is generating quite a bit of buzz.
It appears investors are recognizing the potential of the construction sector, particularly with the government's ongoing emphasis on infrastructure development.
Wazon Denkil's solid track record and strong order book make them an appealing prospect. But as we know, the construction industry can be cyclical and heavily influenced by government policies.
That's a crucial point. It's essential to delve deeper than just the headlines, look into their financials, their project pipeline, and their overall strategy. How vulnerable are they to potential risks like rising material costs or delays in project approvals? These are all factors that could impact their performance.
Great insights. And speaking of risks, let's revisit the situation with Toyo Ventures and their dispute with the Vietnamese government over the Song Hao 2 power plant project.
This situation serves as a stark reminder that international ventures can present unforeseen challenges. It's not just the financial implications that are worrisome. This dispute raises questions about Toyo Ventures' ability to manage complex projects and navigate the complexities of international business.
Their reputation has definitely taken a hit. This could make it harder for them to secure future contracts both domestically and internationally.
Indeed, it's a cautionary tale for any company considering expansion beyond its borders. Thorough due diligence and a clear understanding of the risks involved are absolutely essential. Now, shifting back to the domestic political scene, the appeal of former Prime Minister Najib Razak and the allegations surrounding his potential house arrest are generating considerable discussion.
This situation has raised concerns about transparency and due process within the Malaysian legal system.
The outcome of this appeal will undoubtedly have significant implications for Malaysian politics, potentially influencing public trust in the government and shaping the landscape for future elections.
It's definitely a story that will continue to unfold in the coming weeks and months. Finally, let's circle back to the topic of housing affordability and the proposed Financial and Social Affordability Index, or FSAI.
I think the Center for Market Education's efforts to develop a more comprehensive measure of affordability are commendable. Recognizing that factors beyond just income and property prices play a crucial role is a positive step.
By considering things like access to transportation, property size, and proximity to job opportunities, the FSAI aims to provide a more realistic and holistic picture of what's truly affordable for families.
It's a complex issue with no easy solutions. But I believe the FSAI could be a valuable tool for policymakers as they strive to address the challenges of housing affordability in Malaysia.
This has been a really insightful discussion covering a wide range of topics impacting the Malaysian economy and the investment landscape.
It's a constantly evolving situation, and staying informed is key for anyone looking to make informed investment decisions.
Well, we've reached the end of part 2 of our deep dive. We've unpacked a lot of information, analyzed key trends, and explored potential opportunities and risks. In part 3, we'll shift our focus to global events and their potential ripple effects on the Malaysian economy.
Stay tuned for more insights and analysis. We'll be back shortly.
Welcome back to Malaysia Money Matters. Before we wrap up, let's take a look at some global events that could have ripple effects on the Malaysian economy.
You know, a major development in Europe is Austria's political shift.
Right.
With the far-right Freedom Party poised to form a government their first time in power since World War II.
This has definitely shaken things up in European markets. It'll be interesting to see how this impacts Austria's relationships with other nations, particularly in the context of the ongoing tensions with Russia.
And speaking of political changes, Canadian Prime Minister Justin Trudeau has announced he's stepping down as leader of the Liberal Party, adding another layer of uncertainty to the North American political landscape.
This comes at a delicate time with the incoming U.S. President Donald Trump's protectionist policies potentially straining U.S.-Canada relations.
The timing of Trudeau's departure right before Trump's inauguration is particularly intriguing. It creates a power vacuum, and the new Liberal Party leader will have a lot to navigate in this complex geopolitical environment.
Turning our attention to the world of finance, Warren Buffett is making headlines. The U.S. Consumer Financial Protection Bureau is suing a unit of his Berkshire Hathaway empire for allegedly pushing borrowers into risky home loans.
This lawsuit raises questions about lending practices and consumer protection, particularly in light of the 2008 financial crisis. It serves as a reminder that even the most respected investors and companies need to be held accountable.
And lastly, let's talk about a company making a big bet on the future of digital infrastructure. Digital Edge, this Singaporean data center firm, has raised $1.6 billion to fund its expansion across Asia.
This clearly shows the growing demand for data storage and processing capacity driven by cloud computing, artificial intelligence, and the ever-increasing amount of data being generated.
Digital Edge is positioning itself to capitalize on this trend. Their success will hinge on their ability to build and operate reliable and secure data centers that meet the evolving needs of businesses.
It's a competitive market, but Digital Edge's focus on key Asian markets like Japan, Korea, India, and Southeast Asia gives them a good base for growth.
So what can we take away from all of this? The Malaysian financial landscape is constantly evolving, shaped by a complex interplay of local and global forces.
From cafe chains going public to political shakeups across the globe and billion-dollar lawsuits, it's crucial to stay informed and understand how these seemingly disparate events can impact your investment decisions.
Staying curious, staying informed, that's what Malaysia Money Matters is all about. Don't forget to subscribe to our podcast for more in-depth analysis and insights into the world of Malaysian finance.
Thanks for joining us.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.